Hey everybody, Preston Bryn here with Trader User Group. This is another weekly roundup for this past trading week ending Friday, July the 19th, 2013. What you see on the screen here is a monthly chart of the E-mini S&P 500 futures. I thought what we'd do is just kind of take a step back and then let's just zero in on where we are right now. One of the things that's really interesting, you can see here, they were talking about, I read an article in the paper this weekend about buy and hold strategy, and is it better than uh, um, more active trading? Well, if you had come out and bought the S&P 500 back in the year 2000 and held it until the year almost 2008, you would have just been about break even. And then if you would have just held on to everything and then coming back up to this year, early in the year, around March or April, you still would have been broken even, right? You would have had these big downdrafts like this and then back up, big downdraft and back up. So now we're sitting at a point here, which I think is a really interesting point. We've had a really true breakout right here. Here we never really made it back in the second month. Here you can see the second month we came right back down and then we tested it, and then boom, we shot back up and we took out this other month's high. So these are some key numbers here for us. Would not surprise me. Again, let's just blow this up a little bit and then we'll zoom into a tighter time frame, but I just want to show you what I'm talking about here. We put it on a monthly chart. You can see right here that this high right here at 1685.75 we just took out this past Friday, and you can see where we're sitting right now at about 1689.75 right there. And to me, an important number is probably going to be this low right here that we've made so far this year. I'm sorry, not this year, but in July. You can see the low here is at 1593.25. In fact, that was an area that I had identified as a key support point for the market. You can see 1593.25. So these are the key points I want to watch to the downside. If we come back down and take out 1593.25, then we're going to be testing this area here, which was a prior high set about almost 10 years ago. You can see right here. So we've got a lot of support in this area here from 1593 down to 1574 area down here. Now, I would not be surprised, folks, if we did have a little bit of a retest, but that's a nice little pullback right here. If we do come down to this area, I'm going to be looking possibly to pick up and go long, depending on how we dance around this little swampy area down here. But that's kind of the way I'm looking at it. Now, if we zoom in, and let's just come all the way into the daily, and you'll see just how we've moved over these highs here. You can see this most recent high. And I was talking to our members in our group. This was the most recent high that was made back in May. 1685.75. We poked our head above that area right there, but we closed back down in this area right there. But here we were able to not only go back above that area again, but close back up above that number right over here. So that's a good thing right here. I want to see us hold this. I would not be surprised, as I said, to see us come back down and test this little intermediate support point sitting this right at this area right there. And that's sitting right at about 1665 area. But if we can hold this, okay, even if we come back in this trading zone over here, even if we come back over here, we come back below and this holds, and then we take out this high again and then take out that high right there, then better times are ahead. I've got a forecasted projection, assuming that happens, and that's what it looks like right now. The momentum is on the positive side, that we're going to be back up in this congestion zone right up in this area here. And that puts us right around 17, let's call it 1765 area. That would be where I would say we would end this Elliott wave 5 up. You can see an Elliott wave 3, and then a 4 down, and then a 5 somewhere up in this area here. And then we have one of these kind of patterns like this. Typically at the end of an Elliott wave 5, whether it's an up move or down move, you have a little bit of an ABC pattern. And then we say, which way do we want to go? Do we want to play bullish or do we want to play bearish? All right. That's kind of how this thing could possibly play itself out. Now, of course, this is the side of the chart that we trade, so any damn thing can happen. But right now, what we got to do is follow the price action, follow the momentum. The things that are concerning me just a little bit here, as we're making these, this is a new high right here. We took out this high right there of 1685.75. It's a day bar, and we're able to close above it. But the one thing that concerns me is if I blow this up a little bit, or at least take it down a notch, you can see it. You can see here the strength to get up there is a lot less than the strength it took to get here to take out that high right there. You can see that bearish divergence there. This measures the strength of this move up, and this right here measures the strength of this move up. So the strength on this second wave up to a 5 is less than the strength that it took to make a 3. That's normal on a 5 leg. All right, this is generally when the uptrend starts to peter out, and then we get that, that jagged ABC type of pattern. So this is an upside projection right here. Doesn't mean we're going to hit it, but it's an upside projection, and it's calculated based on Fibonacci time series and Gann, and extensions off these lows here, fib extensions off, because we're in what I called this weekend dry powder. We haven't hit these areas before all time, so you've got to have a common profit taking objective here. And typically you do Fibonacci extensions right here, but we don't need to because this is giving us where the most anticipated pullback is, which is right around 1755, 1765 area. So that's kind of how the E-minis are starting to sort themselves out now. What could unravel? What could undo all of this? Now keep in mind, Friday we had Google absolutely have a horrendous earnings. Microsoft was even worse, and they both tanked, and they caused the NASDAQ to go down and the Qs to go down. But the rest of the market, as we went into close, kind of slugged it off and, pretty much gave up all the losses during the day, and they actually moved to the upside. It was a really interesting day. Now what we're going to look at is as we come into Monday, remember this past week also volatility continued to come in because it was an option expiration period. So that's normal vol comes back a little bit or comes down. And there's a slight bullish bias in option expiration week. This next week we may see a little bit more volatility come back to the market. The VIX actually came in a little bit, so it's getting a little bit lower than I would like to see. So what could undo this run up here to this 1765 area? Well, to me, the biggest thing that could undo it is we come back below this key breakout here, and we have just continued repeated failed attempts, and then we just gradually bleed off down to this 1665 area, and then we come down and test this 1648 area. That would tell me that, we're not that I've got to go sell and sell everything and just start buying puts and load up because we're coming down to this area here. No, that's not it. What I would suggest is that we come down in this area, I'll be looking to buy, and I'm going to watch at these key steps as we come down here. Now, we may not hit it. We may stay right here and come back up. That would be a good bullish sign, and if we can take this area out and keep right on going, that's a bullish sign. So we've got a couple of scenarios. Nobody knows what's going to happen, but there are a couple of play out scenarios. One scenario is this now becomes our R1 or our resistance point. We dance around it, but we always manage to close up above it up here, and we take out the prior highs, which is very bullish, which gives us a higher probability that we're going to come up to this area here. Another scenario is we come back below this area right here. We can't get back up above it, and we kind of dance around here for a while. In that case, these two become very important to us, the 1685 and the 1648 area. And then we're going to make another attempt at it, either up here and break out to the upside, or an attempt here and break out to the downside. Whichever way it breaks is the way I'm going to play it. If it breaks down here, I'm going to play bearish. If it breaks up here, I'm going to play bullish. All right. Keep in mind that more than 60% of the time, When you have a break of a key resistance point or a key support point, you're going to have a retest of that break. So again, what would not surprise me is that we come up here and we move up a little bit higher. We have the momentum carries us up, and then the next couple of days we come back down and we test that area again. Again, that wouldn't mean I'm going to go run for the exits and start buying a lot of puts, but I will test that retest. If we come back down and close below it and we can't get back up it again, back up above it again, I'm going to be looking for this area here. So there's a number of different scenarios. Nobody knows which way. All you can do is you can say, I think this is what's going to happen. But every time it takes a step forward, day 1, day 2, day 3, day 4, it starts to show itself, whether we're going up and the probability favors another further up move up to this 1765 area, or we come back down into this chop and work out, are we going to actually come down lower and test this 1593 area and then back down to 1574. So that's how we're going to watch this thing and play it. Another interesting one that I've been playing is gold, and you can see right here with gold, I've got a Fibonacci extension off the lows. I got in and got out of gold, and now I'm back in it again. We are sitting right on this downsloping trend line right here. Next week's going to be very important for us with gold. You can see right there, there's this downsloping trend line. This is a daily chart. You can see it. Now, when I put it on a monthly, you'll see just how steep that vector is. This is probably a more important trend line right there, and it's more solid than this trend line right here. I said we'll probably break this trend line here fairly quickly. We're sitting right on it now, and then we've got a lot of resistance right up here. We have a cluster right at from 1309 all the way down. There is a 1304, all right, and then there's a 1300. So we've got three areas here. 1300, it's very psychological. 1304, it's a Fibonacci 50% extension off the low here. And then we've got the 1309, which is a major support point off on the left-hand side of the chart over here. So we got a big cluster here. I would love to see us break through here and start a run for the 61.8 extension off these lows right here. If we can do that, that's a very bullish sign. If we fail and we start to roll back down again, then I'm probably just going to unload gold again, because I got in. We made some good profits on this run right here. And I'm going to let this thing roll back down, and if we stair step our way down, we'll probably take this out and come back down and see 1100 before we see 1300. Way back off the left side of this chart, I've been bearish gold, and I projected a 1200 target back in early this year. If we come back out to a weekly, you'll be able to see these trend lines that I have on here. This is a weekly chart. You can see the vector, the two vectors on these trend lines. You know, and obviously the steeper the vector, the harder it is to hold that vector. And this steep one right here started right here, and then we rode it all the way down right there. We're sitting right on that vector right now. And I said, and if you look, you can see all of that overhead resistance plus that downsloping trend line. We got a lot of resistance to punch through. If we can punch through it, that's a very bullish sign. If we can't, I'm just going to get out of gold and wait and see and let it resolve itself. Naturally, at some point, this vector is going to resolve. It could be more of a timing situation, because every week we move forward to the right in the chart, and eventually we're going to have to cross this line because we can't keep that downward vector going. I don't think much longer. And now this one right here, for those of you that would like to hold gold a little bit longer, I would let gold break this vector before you say, okay, the bias is shifted from unloading gold to starting to collect gold again. This vector right here is more for those that are, you know, shorter term traders, and you're trading these counter trend punches right here, hoping that this is the last counter trend and it's going to come up and challenge this vector up here. But every time it doesn't make that challenge, it hits this downsloping vector right here, or trend line, and boom, we start rolling down again. We're challenging it again. This is going to be the third or fourth or fifth time we're challenging it down in this area here. Let's watch what happens. Let's see how this thing goes. Another really interesting one that I've been following is oil. Oil's been very bullish lately. We had something that has not happened in, gosh, I think it's been at least, what, 7, 8 years, maybe even longer. We actually had West Texas Intermediate WTI oil futures go more expensive than Brent. Brent about 3 years, about a year and a half, 2 years ago, was more than $20 a barrel richer than WTI, West Texas Intermediate crude, which is what most of us in here in the United States trade. You can trade Brent, but it's usually what the rest of the world uses. The U.S. uses Brent. I mean, sorry, WTI oil. Now you can see here, oil is coming up in this area here, and I've been right in this area here when we broke the 50, and we were riding this trend upward vector right here. I said this is going to offer some pretty serious resistance, and it did right here. And again, these are weekly bars. It took us almost a month to break out of this area. And I said, if we break, we're going to challenge this extremely quickly. Well, it took us 1 week. We beat it, and the next week we kept going up. So I said, okay, we're going to challenge this one pretty quickly. And we've gotten up to about 108.47. Would not surprise me at all to hit and take out that 110.55 price in oil. Why? Because in oil markets like bonds, they love to hit these numbers, and then they'll poke their head up and then they'll roll back over. They love to challenge these things. Oil traders are really infamous for taking it and challenging key pivot prices. So I would not be surprised to see that. But if it does, I'm going to be coming up here, and I'm going to put on bear call spreads using calls, so it'd be a credit spread, and probably you can get a lot better premium in the oil futures options than you would in USO. USO, you could do some in the money spreads or bear put spreads, things like that. Or to do a bear call spread, there may not be as much premium to give yourself enough distance between that 110.55 and oil. Because remember, when oil takes out previous highs, it does it with gusto, right? You can see when it took out this previous high, it did it dramatically. It did this 100 in 1 week. It took it out and went all the way up to about $104, $103.50. So it beat that by over $3 a barrel. So it just took it out with gusto. So every time oil takes out a prior high, they run it up, and then it generally sells off a little bit. There's some profit taking. So I would not be surprised to see this thing come up here, take out that high, and then I'm going to be looking to short this thing. Now, we may not even get there. It may just start to roll like this. But I would not be surprised to see that. Okay, that's kind of how I'm looking at. Excuse me, how I'm looking at oil right now. Another key breakout is the Dow Jones Transports. Check this out, guys. Dow Jones Transports, we had a key breakout here. This is a weekly chart. You can see right here this past week. Call it this Friday. I'll put it on a daily in a minute. You can see the Dow Jones Transports hit all-time highs. All right, so now, what's the Dow theory? You have all-time highs in the Dow. You have all-time highs in the Dow Jones Transports. It's a bull market, and 6 months later, the markets are higher than they are now. So we've had all-time highs now in the Dow Jones. Right here, this is the Dow Jones Transports. If we come into the daily, you can see it right here. We took that high out on Thursday, and it was a valid, we closed actually above the 117 Thursday, 117.30 rather. And then the very next day on Friday, we came in and we took out the previous day. So that's a valid move. If I just shift it down a little bit like this, I say, okay, look at this. This is very strong. We've taken this thing out. The thing that concerns me, again, just like the E-minis, is we've got this bearish divergence setting up. That does concern me. This is saying this can run up a little bit higher. And again, it'd be like the little engine that could. It finally gets up there, and it can get up here on less volume and less strength. Finally, it gives out and it rolls. But that's what we're seeing here with the Dow Jones Transports. And again, so we've got all-time highs in the E-minis. We got all-time highs in the Dow Jones Transports. And if we look at the Dow Jones futures, we're not quite there yet. Okay, notice I said that we're at all-time highs in the E-minis. We're at the all-time highs in the Dow Jones Transports. If I put this in right there, you can see we actually broached above it, but we could not close. We're slightly below it. I'll blow it up so you can see here on the chart on the screen. So we're not there yet, folks. So we're just a hair's breadth away from taking out. That's where we closed. I don't look at the intraday. I look at where we close. Over this all-time high there. We're at all-time highs for closing, but not at all-time highs for intraday. I'd love to see us get up there. So now that completes everything, and we're at all highs. You know, the Russell, which we'll take a look at in a second, is at all-time highs too. So we're at all-time highs across all of these. We got a little bit of bearish divergence there. If we look at the Russell, I mean, this is just clearly, let's come out to the weekly. You can see here, everything is just really running very strong. You can see where the Russell is. I ran an extension off the Russell. You can see we're projected, you know, this is a projected move. We can come up to 1064. We're almost there right now. I mean, we closed at 1050, and I had a projection. The first really strong resistance point is at 1064. And this area right here, this colored bar, which was going to serve as resistance, is now support. So right now we're at 1050, and the downside support's 1029. We put it on the daily. It'll probably show up just a little bit better for you. You can see right here where we're sitting. And that first line is, as you can see right here, at 1064. So, and the other thing we do not have in the Russell that we had in the others is bearish divergence. Here with the strength, you can see these peak to peak. They're about the same. I don't see any bearish divergence right there. So that says this has still got a lot of power to that punch. That's a very strong move right there. There's a lot of money flowing in small and mid-cap stocks right now. Not as much flowing into the Dow or the S&Ps, but there is certainly a lot of money coming in here. So that's kind of where we're seeing this thing right now. Be careful. The VIX is very low. And if we were to come in here, let me just see if I can pull it up for you guys here. If we take a look at the VIX, it's at 1254 right now. Look at this. I mean, we are down at some very low lows with the VIX. Let's put it on a weekly, so we'll step out a little bit. You can see here I've got some support, natural support and resistance points here. You can see right here that's very low at 987. Here we're sitting at some lows that we haven't entertained since beginning of the year. We did have a pretty good low back in March of this year, but you know, it's been working its way up, and now we're sitting here back down at a fairly lower point right here. We're sitting right at about that 12 level, which to me is giving me a little bit of concern that we're just getting a little bit lower than we should. On the day chart or the daily chart, you can see just how low we are here. We're down almost at these support levels right here. So would not be surprised to see a pop in volatility. All right. The other final one, I'll put this up here. We'll look at this and then we'll call it a weekend. Is bonds. Bonds is one that I love to trade. You can see here bonds had this big, huge sell-off right here. This is a daily chart. You can see this big, huge sell-off when Bernanke opened his mouth, and you can see. I mean, this is you would think this is a weekly chart, folks. This is the daily chart. That is a day bar. Can you believe that? That is 1 day for bonds. I mean, that is enormous. And now what bonds is doing is trying to come back and make up that entire move. You know, almost like when Bernanke spoke, you know, in that afternoon press conference after the markets closed, that's what bonds did. And now it's just about making it up again. I can see bonds getting up in this level, and then you're going to see shorts start to step in and drive it back down that ladder. Somewhere back down in this area here. I don't think bonds is really to completely give it up and come back down for quite some time. I think the interest rates are going to be a little bit lower than people think. If we step it out to weekly, just to show you how far it can go. I mean, if you look at this, this is where we are right now. All right. And before the crisis hit, I mean, we were down in this area down here. All right. I mean, we're down around 112. We're still up in the 130. We're around 135 right now. This is down around 110, 112 right in this area here. So we've got Still a lot to give up down in that area there. That would put us in a more normalized environment. And the interest rates would be 5 or 6%. They would not be crazy, but it'd be right down in this area here. I still think we're going to give some chop, and then probably 2014 going into 2015, we're probably going to be down in this area down here with bonds. But this is kind of where we're sitting right now. This is a violent move down. I don't see any bullish divergence here. You can see how the strength of that move is valid. We're just having a little bit of a reflex bounce back up. I think you're going to see sellers step back in at some point, and it's going to roll back over again. All right, everybody, that's a little bit about what we're doing. Just real quick, don't leave us just yet. We're doing the futures webinars. We've already had 5 parts come in. You can see any one of those 5. They're all, one price gets you all 5. You can check it out, see what we got. We've got 3 more parts coming, but we cover all the futures complex from agriculture to energy to the metals market to the indices, bonds, currencies, interest rates. I think you guys will like it. Now, the next couple of parts that we're going to be covering is what's the best way to trade some of these things using both options and just flat out futures. So I would certainly welcome you on that. If you're not a member of our group and you like what we're doing these on these weekly free roundups, then come on in and join us. I'd love to have you. If you got any questions, just write me. I get a bunch of things over the week, and I try to cover everybody that I can. All right, have a great remainder of the weekend, and I will be in touch. Bye now.